Thank you, Mr. Chairman and Ranking Member. Yeah, I think these hearings are just so valuable for us to gather information, because one thing that I've learned coming here is that you don't often get a chance. I mean, we won't do this and then come back in a couple years. That's not how it works. And so whatever we do has to be done correctly. And obviously, very much appreciate the ongoing comments, how we can improve what we have in front of us. Obviously, there is some advocacy here for continuing the current structure. I think that there is probably a broader consensus that we need to look at a new structure and how that would work in making sure that consumers are protected and that access to the market for all borrowers is available, not guaranteed, but available. And so housing, 20% of what we do, but we know that it is more than that. Home ownership is the bedrock of really our political philosophy, also the bedrock of wealth creation for many, many middle-class families. And so this has got to be done right. And Mr. Thomas, thank you for your excellent testimony a couple weeks ago on the debt limit and what that would mean for borrowers. I think it had a huge impact. I think we were able to change public opinion about what that meant, and I think your contributions were greatly appreciated. I share Senator Brown's comments in that direction. But I want to throw you a little curveball, because we are talking about a lot of discrete and unique groups. But in my state, one of the most acute housing problems we have, other than rural housing, is Native American housing. It presents some real challenges for lenders because of how property is organized. It presents real challenges in terms of the legal structure, and just based on whether normal legal rules of foreclosure would apply. And I want to ask all of you, any of you, if you've thought about the unique challenges for Native American borrowers to improve the quality of housing and access to first-time homeowners or access to single-family housing on the reservations. There we go. That answers my question. And I make that point because we spend a lot of time talking about access, and we spend a lot of time talking about unique issues. And I will tell you, for me, and I know for the chairman, we've seen it in our communities. It's a growth area. We desperately need to be thinking about how we protect consumers, how we get access to those markets. Yeah, Ms. Cohen.
Thank you for the question. I would point out that Native Americans are part of a community of low-wealth borrowers who face a lot of hardship in paying their bills on a regular basis, and the legal services network around the country serves Native American communities in certain states and sees the problems with the initial issuance of a loan and also the problems that people face once they get a loan. And part of creating a housing finance system going forward that works for all borrowers, middle class and working class, low wealth borrowers, is to create that flexibility not only in the underwriting, but also in how servicing is done to make sure that people do get a solution and they get a solution that works for them. Right. People who have very few dollars in their pocket don't really fit with the traditional DTI analysis.
And I would agree with you in terms of off-reservation, but we have a unique situation as it relates to on-reservation housing and on-reservation borrowing. And so just put that thought into each one of your heads as you're thinking about how we can, in fact, meet some kind of standard there. My last question, Mr. Gupta, the mortgage insurance obviously is key for many families, and especially first-time homeowners who are trying to buy a home. We see with student lending a lot of folks who aren't qualified can't save a down payment. The only access they're going to have is through some kind of mortgage insurance. We want to make sure we get this piece right in this bill. Are you satisfied that the mechanics that have been outlined in this bill will basically help maintain a robust mortgage insurance market?
Thank you, Senator Heitkamp. We completely agree with the outline of what's been recommended in the bill in terms of mortgage insurance and usage of mortgage insurance with deep coverage. In addition to that, what we would add is there's no reason that mortgage insurance can also not participate in the bond guarantor role. At the end of the day, mortgage insurance companies are credit managers for mortgages only. By law, we are required to only participate in the mortgage insurance business. We don't insure auto loans, we don't insure credit card loans. So this is a collateral class that we know how to manage. And it would be a good opportunity and a sustainable opportunity in terms of borrower economics, in terms of sustainable housing, to actually have mortgage insurance companies not only provide the deep coverage, which actually sits in front of the taxpayers, but also provide bond insurance coverage right behind it. In addition to that, I would say we continue to have dialogues with the FHFA, with the GSEs, with the federal bank regulators, as well as state regulators on strengthening the industry and making sure that the industry continues to be more solvent and stronger coming out of this cycle.